Come on, John. Do we have to talk about your garden again?
You know, you're going to reap the rewards from this little experiment of mine, and I think your attitude is really going to change about talking about my garden or potential garden.
I'm sure the fans of the podcast are going to love this. Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, you've been gone for a week. We have a new audio setup that even picked up that truck driving by outside, so I don't know if it's a good or bad thing. Your garden's blooming. You went fishing.
I'm frozen in fear that I'm going to make a noise and this mic's going to pick it up that I'm not supposed to make. So I'll get over that, but hopefully it sounds good.
No Taco Bell before recording.
Yeah, this will pick up digestive noises, pencils, writing, everything. I don't know what I can do. I'm just going to have to try to talk.
I mean, the fact that we have now invested about $40 into this podcast tells us that we're starting to get serious.
Well, we have friends with gear. That's what good friends are for, good podcast gear.
That's right.
And they've come to the rescue.
I mean, they not only have audio equipment that we're allowed to use, they also serve beer a block from our...
Yes.
So, thank you, Outstate Brewing.
Yes, thank you for the mics. And the garden's looking great. Now comes the time where you have to put it in the ground and actually tend to it, and that's where things can go south for me. Depending if it rains all the time and I don't have to do anything, my gardens turn out great. If I have to watch it and water it and weed it, that's where it doesn't always go good for me. But I think through just the sheer volume I got growing in here, and again, the lima beans definitely in the lead. It's climbing up the window now. And not all of them, just one. I have a super seed in there, I guess.
I feel like you are not going to get that Venetian blind back from that.
It's wound around there pretty good.
Yeah.
I can already tell I planted too many peas. They dominate everything. They're just taking over and shading everything. Other than that, it's looking good, a wide variety. The one I'm really looking at is the melons. I'm looking forward to that. If I pull that off, every kid's going to be my friend this summer. Little mini melons.
Except for your son, you said.
Yeah, he doesn't like melons, of course, because I'm growing them probably.
Probably because you like them.
Actually, I'm neutral on the melons.
All right. So how about the fishing tournament? You want to share any of that? Probably people don't care. But
it was the one that got away. It always is. It's that one fish. Yeah, I know I had it figured out pretty good. But then you gotta apply that during the tournament. I should have tin cupped it and stayed in the same spot and just went for it. But I sold out and started moving around, and ultimately cost me probably a check. But I am pre-fishing champion, which pays nothing other than you get walleye to eat for dinner. So I feel like I won the pre-fish. Again, that doesn't pay very well, and then nobody cares about your story, how you almost won. So that's what happened there. Almost won.
We'll have to get you a pre-fish champion trophy or something you can at least put on your desk here.
And then you can tell everybody about it, and again, nobody cares. And that's walleye tournament fishing in general. That's what happens. Like, it's very important to you and maybe 35 of your friends that do it, and then everybody else dozes off within the first two sentences.
I mean, I think 35's a stretch, but if you want to say 35, go ahead.
Caught a lot of walleyes. Caught a lot.
I like it. Well, I mean, you leave the office and grains take off straight up. So what's the...
Yeah, I worked the whole time. I was in the camper, and I got dual laptops, maybe 3 sometimes going at a time. And everything changed, as it always does when I go on any sort of vacation. My favorite one was, Vegas 3 years ago. In the air, the Russian-Ukraine war broke out, and when I landed and you take it off airplane mode, I think, I don't remember how many messages there was, but it was a lot, and a lot of text. And that's about how they start. But everybody was looking for this rally. Everybody's been talking about this rally, and it finally is here, and it's fairly powerful. I mean, we got to set the bar low. I mean, this is not powerful in the sense of the last 3 years, but it is when you watch it grind down for the last 5 months in a row. This is pretty fun to watch. This is what guys needed. This is where some of the marketing opportunities are going to come from. Now, the better question is, why is it doing this?
And when we look at it, of course, all the articles start coming out. Here's the positive reason. Here's South America weather. Here's fund buying, funds in record short they have to buy. There's short covering. All that stuff. All those articles come out after it starts going up. But
yeah, after, and that's not uncommon. This one's kind of unique where it seems like they've cobbled together maybe five different stories, and you ask 5-10 different guys, and you get 5-10 different answers. And so it's unique that way, but the point is it doesn't really matter. What matters is going forward. So you have this short covering rally. We're going to see the numbers on Friday. So you have the commitment of traders report, which is the positions everybody has, not individually, but as a group as a whole. So you have the small speculator, large speculator, which is going to be the funds. And then you have the commercial side. So 3 different categories released Friday. And it lags, I don't believe Thursday and Friday the week before is included, the in the week that you're in is included. So it's basically last Wednesday through this Wednesday we're going to see. And that's where all the action was or has been so far. I might be wrong on those days. It does change, but as far as I understood, that's what it was. So like they'll leave out this Thursday and Friday, or maybe it's just Thursday's data or Friday's data. But my point is we're going to see probably a large shift. So how do they determine who got out of what? Well, you can kind of tell what's been happening in open interest. Is that it climbing or is it going down? So if you see a large rally like this and open interest is going down, meaning the contracts that are open, there's one buyer, one seller equals one open interest. Not 2 because there's 2 people involved. One buyer, one seller, one open interest. So when you see a rising rally and open interest rising, that's a healthier market than a market where you see open interest dropping, meaning less people are involved in the contract, but the price is going up. It means they were getting out and no one's replacing them or adding. So what do we have? We're going to know a lot more Friday, so we'll look at those numbers for sure. So far, it reeks of just pure short covering. You had yesterday it looked a little different. You had, and this is why I like spreads. You had yesterday July beans leading November beans by like 10 or 12 cents. Those spreads have been DOA the entire, since November. July, I think, was carrying, $1 premium maybe in November, all the way down to 0. It carried 0 premium to November, going back 2 or 3 weeks ago. I know a little bit about those bull spreads. I had been in them for about 5 months, some different ones, but they've been a grind down, a painful grind down, I might add, for many months. So finally, those woke up yesterday, which was a great sign, but then today it gave it all back. You literally saw the whatever gains. July was down 5 cents beans today, and then you saw November up 7. That's not a real positive sign. So you're getting mixed signals. Yesterday it looked healthy. Today it looks super unhealthy, even though you got a higher close for November beans. And then corn has been very hard to tell. You definitely saw some heavy bull spreading where July was way over December, old crop versus new crop. Great sign, but then you didn't see that today. No follow through. So what you want to see for a healthy market is you got the news that got us here, and they covered their shorts, which is great. It was a very unhealthy market, very hard to market, low price, unprofitable, and the funds are record short at a time in the year where it's very dangerous to be that in front of all this weather, in front of all these unknowns. So now we fixed that a little bit, which turns it into a much healthier market, much easier to handle, still wildly unpredictable. Short covering rallies can be extremely powerful. You might as well be trading walnuts. It doesn't matter one bit. It has nothing to do with the commodities. It's one hedge fund, one fund tripping the other's trigger. One guy's there's probably hedge funds buying right now, trying to force other guys out. It just becomes this game where you cannot tell what's going on other than people are running for the exit doors. There's way more people trying to get out than they're trying to get short right now. And then you have these powerful rallies, which we've seen in beans. We've seen it in Minneapolis wheat. So clearly that's what's happening. Now, what's super important is, can we build on this and where are we going from here? What you're going to want to look for is like actual demand. I have my doubts. So we weren't selling this stuff 30, 40 cents cheaper in wheat and beans. I don't know why we'd start selling it more expensive. But then you have people saying South America has major problems. China's going to panic. They're going to buy, and you hear everybody's opinion, and that's fine. But now you're going to actually want to see demand follow this, and then you have a sustainable rally. And another thing that could happen is they could technically trip each other's trigger to where they start getting long, or maybe they're buying for inflation. Who knows? You just don't know. And it could build on that for a time period, but that's a much unhealthier market. This did happen in the ethanol boom, right when that started in 2008. I think we had, if I can remember right, really poor corn fundamentals. I think we had 2+ billion bushel carryover, but corn made it to 840 on the perception everything was different. Corn's never going down, goodbye $6, all that. All those headlines, all those fun articles that we make fun of now. And then by harvest time, it was 297. So reality eventually showed up there, got a little ahead of itself. So never say never with these markets, I guess is my point. You don't know when this starts, how far this could go. Think of the covering as fuel for the fire. It has a lot of fuel left if they want to get long. If they didn't cover as many shorts as they thought they did, it could go on for a long time. How do you navigate that? You can't. You just take it day by day, and you do the best you can with trying to figure out and reading the tea leaves. Like today, I was looking at the spreads. It looked super unhealthy, but that doesn't mean that that's what it's going to look like tomorrow. I just have a hard time believing, even though beans look good on paper today with November leading the way, that the November contract's going to pull up the entire grain complex all by itself, from here. Was it a day of rest before the funds, resume their buying? And you can really tell the hallmarks of their buying because I had a couple calls today or the last couple days. Hey, say every night it's down overnight, and then when you wake up, it goes rocketing. Well, that's because they're using that liquidity during the day to get out, where at night they're not doing that same thing. The market's just naturally doing what it would normally do. And then the market opens and all these buy orders come in to get out of these short contracts, and boom, you zoom up. And that's where I guess I'm more of a tape reader. You can see it in like the 5-minute to 15-minute charts, these bursts and these volumes of that they're planned to happen, in certain time frames. Everybody's got their own proprietary mix, how they get in and out. So they're not going to tell you, and you're never going to figure it out. You can only kind of read the footprints of what they're doing there. And clearly you're seeing these big blasts of buying and the short covering. And now it's probably going to go in more of a mode where it's going to be harder to tell what's going on. But you can look at the chart and you just see these big up days with the news that we have. And it's really confusing to a lot of guys because you couldn't give this stuff away and all of a sudden we're going to run out, it looks like on the chart. So what's real, what's not? Well, that's what makes the market fun. We'll try to figure it out here as we move forward.
Well, I think an important point to remember, too, is a lot of these orders, some of the stuff that's coming in, it's algorithmic trading, too. It's not necessarily based on fundamentals. There's something triggered in there, and that's where you can have some guys push other guys around looking for buttons.
Yeah, and you hear guys growing about that in these Facebook groups and stuff like, I wish guys that, if they don't raise it, they shouldn't do it. I just don't think that you want speculators in there. Do the computers make it harder to predict? Probably. I mean, I would think that it makes marketing harder, but they also provide you with opportunities that wouldn't normally be there. So all these guys wanting to kick the speculator out, I think that if you just had the commercials bidding on your grains only, I don't think you would like the price that they're offering you. So I really don't like that argument. I don't think they know what they're talking about. And I really don't believe the commercial would say, hey, these funds are gone. Let's pay these guys $6 for the corn. They're working awfully hard. Let's maybe give them maybe $7. It's just not going to happen. They're going to pay you the bare minimum. So in my opinion, it goes in cycles. You're going to have these speculators provide these prices that maybe you shouldn't have had. And they were wrong on their speculation, and it provided your hedge opportunity. That's where I see the value. So there's a fine line there too, where you don't want to have it so out of control that it eliminates what the markets were made for, which is risk management. So you do need to regulate it. I'm not a huge fan of what they just recently did. I think a year and a half ago, they allowed the large speculative funds to own more positions. I don't think that's a move in the right direction. So you want to find that balance, I guess is my point, where you have people able to bet on a market being higher with maybe very poor fundamentals. Maybe they're right. Maybe things do change, but maybe it provides the guy the opportunity to hedge at much better prices than he would have previously had. And that's the way I look at the market right now.
Yeah, I think, we've talked the last couple weeks that on hedging that we were making recommendations. You were talking to guys about hedging and leaving the upside open. And we talked about other guys were not doing anything and taking the bet that this rally's coming. So the rally's here.
Yeah.
What now?
Yeah, so the guys that bought puts, maybe they were worried, they don't make as much money as the guy that took all the risk, they get all the reward. And that's, I've delved into hedging many times and what it means. You're just simply deciding you're giving up some equity, maybe on premium, maybe you're taking risk being short a contract. However you do it, you're giving the counterparty some risk in return for what you're going to get as far as a guarantee. So you're transferring some of your risk, but the guys that don't do anything and just go for it in price, they're very heavily rewarded when stuff like this happens, or it goes to $6 and you didn't do anything, and then you get that all $6. Where maybe a guy bought a 50-cent put and then it went to $6. Yeah, he lost money on the put, but he's going to get $5.50 or $5.60 for his corn, where the guy that did nothing got rewarded and got $6. They're both still going to make good money, but this time the guy that took the full risk got more money. So it's all about life choices. Like the feeder cattle is where I keep going back to. I know livestock risk protection is a lot more popular than puts, but back in the day, a lot of guys buy puts, and they wouldn't buy them to cheer for the market to go down. They simply wanted to go to sleep at night, they would tell me. They wanted to transfer that risk, knowing they bought a put. They know the worst case scenario on that, other than basis risk, which is a whole nother story for feeder cattle. But they knew more or less what they could lose, and they bought the put so they could sleep at night. They literally, the words out of their mouth is they don't want to worry about this. It's a high price. I'm going to make money at this. So it's just a choice on the farm or the ranch or the bank or the import-export company on whether you want to transfer risk to someone else. But then maybe when it goes up, you don't get the whole reward. I find in marketing you want to do a blend of everything. Take a chance on some bushels, totally. Lock some in at profitable prices and leave, maybe buy a put and leave the upside open. But that kind of brings me into our next topic. If you're going to be a better marketer, you need to know what time of year you're in. So I said, hey, I'm worried about the downside. I've been saying that, fundamentals aren't looking good, but with the fund short in front of a spring like they've never been before, where you have all these unknowns, you want to keep the upside open this time of year. So that's why when I was saying absolutes as an always answer, do I market? And in their mind, it's like, do I sell it and lock in that price, or I don't do that? It's like it's too black and white for too many people's marketing plans. It doesn't need to be that way. There's a lot of shades of gray. So let's say you did buy a put and it's rallied. Let's say a 50-cent put. That's a lot for a corn put, but you bought a $5 put that was a little bit of the money. I looked at today; those are worth 42 cents. So you've given up 8 cents of equity, but you also got to see what was in store for the weather. What if the weather was good? What if there was no news and this continued down? That guy would have been rewarded, where the guy that did nothing would have been out of luck. So it's this balance that you're looking for. The whole point of hedging is we don't know where the market's going. You're trying to make the numbers better on your farm and transfer some of that risk. And oftentimes the whole point of it, like I was just saying, is because you don't know, that's why you're doing it. Or you don't want to worry about it, that's why you're doing it. So you got to realize this is a time of year, especially with the funds that short, that things can change quick. And, I guess they did. I don't exactly know what the news is that it's going up on. It's the blend of what you talked about. But you see how quick it changed. The exact same thing happened last year. It was at the beginning of June, and then it was all over by, June 21st. But you couldn't give the stuff away, and then all of a sudden the weather wasn't as good as they thought, and we went from $5 to $6.40 in like a week and a half. Where if we're harvesting it and a lot of supplies coming in, you have a little more absolutes there. You know what I mean? Yeah, we had that windstorm, and I was afraid I would say it wrong, so I just said windstorm in Iowa a few years ago, but more or less the quantities are going to be known as you go into harvest. And that's a little more at a time of year where it's harder for the corn market to rally or the bean market to rally late summer. And maybe you're using different strategies than you would in the springtime. In the springtime, in my opinion, is always, especially at a low price, keep that upside open the best you can. Maybe protect it, maybe not, but at least keep yourself in the game for higher prices. Midsummer, it changes drastically. Fall, it changes drastically, and then obviously in the springtime. So recognize your time frames and the different strategies that you should be doing at that time of year to try to make a better price.
Well, and we talked about in the past too, guys that have a number in place or have an idea of what they want to be at a number, and they're waiting to do something, and now that number gets here, and what do they do?
Oh, you got to change that order. I mean, it's going way higher.
Right.
Like, you quickly change it.
It's going up. It's definitely going higher,
Yeah,
right?
like, that's a guarantee. If you're going to 5, then you're going to 6, and when you get to 6, you're probably going to 7 and maybe 8 or 9.
Yeah, I mean, 10's always in the cards, John.
I joke, but it's a fine line there. I'm not saying that if the Russian-Ukrainian war broke out that you don't change some orders. Like, there's going to be events where, yeah, you're changing orders. Then you have 5 different stories that may or may not be happening. It's hard to tell. You might not want to be changing your orders. Stick with your gut. Stick with your first levels. Recognize that. But it is a season where you start calling and canceling orders and changing them to higher orders. There's a fine line there. I don't think that's a great idea. But again, you don't also want to get steamrolled. But this would be a market where I would stay with what your first instincts were, whether you thought 490 was a great price or your order might be at 510. You want to be really careful with continually adjusting it, because that's exactly how you don't get marketed. Eventually that level never gets hit, But again, I don't speak in absolutes. There's going to be a time and place for adjustments. As a matter of fact, there's going to be time where you're just suddenly things change and you're really adjusting your strategy. But then knowing when to flinch and when not to flinch, I mean, I guess that comes with time more than anything else. And then you have guys that have their numbers, they do their numbers, they execute it exactly like they planned it, like a calculator. I have a couple clients like that. Unbelievable. I couldn't do that. And they don't change anything ever. And they have a good plan with the banker, and they have it all mapped out, and they stick with it. Those are what I call the true hedgers. My mind doesn't work like that. It should, it just doesn't, where I think I can better it. And again, get back to what I was just saying. I would probably be a guy that would be changing my order too. I'm certainly not perfect. I tell guys not to use limit orders all the time when they want to get in the market. And then I'll put a limit order in tonight and probably miss the trade I want to get in. So I'm not saying I got to figure out. It's just the time of year, be real careful with that. Stick with your plan. Don't do 100% at 490. Maybe you're doing 10%. Don't be changing those orders. If that worked for you and it's profitable, keep them in there, But it really depends on your situation. This is not a one shoe size fits all at all.
Right. Well, and yeah, you don't want to market everything, your entire crop, all 100% in one way or at one time.
Yeah, or run into margin calls that you can't pay. I mean, you plan your hedge ahead, and it works a lot better than trying to wing it.
Right.
You know what I mean? That's where you hear the bad stories. You just plan and then execute it, and make sure you kind of just, even if like the banker needs an absolute, like, you only have this much for your marketing loan, like, and okay, so I want a short corn, I want a short futures, but I am worried about the margin calls. Well, then maybe you're looking at some higher calls to protect that ceiling. There's always that gray area, and I'm not saying to do that at all. This is definitely not a recommendation, but just don't think in such absolute terms. You want to be flexible, and that's kind of why I have the job I have. It's not your job necessarily. Check in with a guy that maybe knows, and look for ideas. So right now I'm going to make 2 sheets for my clients. I've been saying that for the last couple of days, but it's been moving pretty fast with ideas. I want to get ideas out to guys. You get it through compliance, get it approved, and get your ideas to your guys. And maybe they think of a better idea off your idea. The more ideas that you have, maybe they don't like any of them. Maybe it doesn't suit them. So I'll do a few different categories: lower risk, medium risk, and the higher risk stuff, and just try to make it really simple. But get ideas and try to find those gray areas. Maybe I would love to have newsletters that I could subscribe to that bring me ideas. I think more ideas are better. You can only cover so much ground, and the markets move so fast and change so fast that the more quality help that you can get, the better off you are. Not the more help. Actually, there's lots of help, as I put in quotation marks that you can't see, of course, on a mic. There's lots of help out there for you guys. But more quality ideas coming at you is probably not going to hurt you. Just learn how to sift through them to better suit your operating loans, your margin calls. I'll have guys that are only options. I'll have guys that don't miss a beat shorting futures and making margins on that. I have guys that are terrorized to that, you know what I mean? And it doesn't suit them at all. So you got to find what suits you and what works best for the blended stuff you like.
Yeah, I mean, there's analysis paralysis out there by having too much info, but various ideas, having those things come through, you just need to also have your plan or have an idea of what your plan should be.
Yeah, I think it's there as a smartphone and people getting too mumuch information. That definitely can be very harmful to you. And again, I stick with, if you're getting your information for free, you're getting exactly what you're paying for. I meant it goes with any business or anything in life.
This podcast is free.
The product behind it is, well, I assure you that's not free. No, it is. But it's getting the advice to you to better yourself. Touche though. But there's no actual recommendations here. We're just kind of kidding around.
Right.
But it is. If you think that people are just out there out of the goodness of their heart trying to help you with information. Why would they do that? I mean, why would anybody with any talent pick you to write you something on the internet, a news story to help your marketing? Let me ask you, has that ever worked for you in the past? This might spur some angry emails or phone calls. I don't know, but generally it goes for any business, the free stuff. And I meant there's exceptions. You get what you pay for. And I find that more people than ever are being informed, using the quotation mark, which doesn't work very good on a mic.
No, we have to go on YouTube, John.
Yes.
Just so you can use air quotes.
People are more informed than ever, and I don't know that I'm seeing the results from this information. Maybe I'm wrong, but that's it. The era of the smartphone is upon us, and that's where people get all their information. I'm not so sure it's all helpful people putting that out there.
No. I mean, we're up front at the end of every episode, I guess, right? Like, we would love to have you as a customer, and we'd love to share ideas directly with you based on your specific situation. That's why our podcast is free.
Yeah, there's no recommendations, nor is there gonna be on here, nor did we make it for that, because I don't like that at all, because everybody's different. I like to know the guy, and you have to talk quite a bit, and it has to suit them and their personality and their farm. And that takes a while to get to know guys. It's a process. So this is more on just what's going on in the markets, educational. What's happened, examples, pitfalls. Just hopefully helpful stuff that maybe you're not hearing in other podcasts.
Yeah, it's what we talk about in the office when we're just chatting is our goal, and I think it's helpful for people to know how we view things or how we discuss different things that come up in the markets, and there's stuff happening in the markets every day.
Yeah, and that's why I believe there's job security in what I do. Sure, it will eventually drive you nuts being a commodity broker. I remember way back when I tried to get disability insurance, actually. My father at the time thought it was a good idea, and I got that advice. But I find to come out that you can't get it as a commodity broker unless you get it through Lloyd's of London. And of course, they famously insure anything for the right price. So I'm thinking there's probably a reason for that, and it probably has to do with the actuary tables and the claims. So it's a high stress job, but I enjoy it. I enjoy the conversations, and again, that's my job to manage that side of it and try to sift through that information and hopefully be helpful.
Yeah. Well, let's. Moving back to the markets. My new favorite market, since I won't say which way I'm in, but. Crude oil's been interesting the last couple of days too, and what's that telling you on the markets and where crude's at?
It seems like every time they start some sort of tension or escalation in the Middle East, oil goes down. It's a market that I don't even know. I feel like I don't even know you anymore, oil. No, it's I think a sign of the times of a weakening economy. You would think like for sure with all this tension it had to go higher, and it's been wrong. It's been wrong twice now. Recently, I think it's a production and demand problem. There is weakening numbers. And it's I have a lot of guys that are involved in the indexes. You can short index futures or go long, either one. So it's something that we cover quite a bit. I think it's the numbers are probably weakening. And with the stock market indexes, bad news becomes good news. That's the upside down world we live in. In their mind, if it's bad news and bad numbers, that means the interest rates are going to go down, and that means everybody's going to buy more everything, which is just the world, the consumer world we live in the U.S. now. So bad news is good news, and we've gone back into that cycle where 2 weeks ago, everybody's like, oh, man, these numbers are running hot. Like maybe they're going to actually raise rates. And they went from thinking they're going to cut 5 or 6 times this year to maybe they're going to raise them. Now we're back to maybe they're going to cut them, and this yo-yo. So stock market up, oil down with the bad numbers, and that's kind of what you're seeing. I think just kind of a little weakening around the edges. You're just seeing some warning signs. I think Chips Ahoy aren't selling very well. Starbucks had some trouble, and it sounds silly, but these are the things people watch. These are the gauges. The things that can quickly not be bought to save money. So that's where it starts. You're also seeing some real estate markets, Florida and California. They always say that it starts in those states, and it has started. A lot of homes for sale. Not a lot's moving. Again, there's going to be hotter markets. There's going to be zoning where you can't do an Airbnb, and that's where you're really seeing stuff go up for sale quick. Where the Airbnb stuff, where you can zone that and have that, those markets still are they're still looking pretty hot. So you get mixed signals there. Oil, I think, is just plain old, doesn't like what it sees and sees weakening demand. Of course, that can change quickly, but that's the way I read it. How do you look at it?
I would say the same way. It's this seasonally, you would see more gasoline usage.
Yep.
Seasonally, oil should be heading up. I think the tension in the Middle East automatically making oil go down. Usually that is a no-brainer to
the crude oil in my account.
Buy crude oil.
Yeah, crude oil in my account currently from 2 weeks ago. That's a warning sign to me. Yeah. That's not getting the equity results I want. It's, as a matter of fact, it's negative equity on that. So another warning sign that, hey, John, that's a horrible trade. Why'd you do that?
Yeah, well, you should try being, short, like the Dow and long the oil. That might be a good spread. That's not a recommendation. That would have been a really bad recommendation the last few days.
The old O'Hare spread, I see. The O'Hare spread. Buy 50 bean contracts on a dry forecast in the weekend. If it doesn't work out as a floor trader and, hit the airport, that's called the O'Hare spread. Yeah. That's no longer around because the trading pits, but that was one of my favorite ones.
You can still hop a plane to Vegas, though, if you want. And if you hop a plane to Vegas, make sure you let us know, because let's see, I was thinking when you were talking about, you were talking about the Ukraine war when you were on a plane. Now you went fishing and grains turned around, but also weren't you traveling during Brexit too?
Brexit was another walleye tournament, but I wasn't going to be in the office the next day. And that happened in the afternoon and really made the market go up. Yeah, I have a knack for that. So if you like volatility, I'll let you know when I'm going on vacation. You're just going to have to contact me and then just bet on volatility.
I like it. Anything else you want to cover today, John?
No, I mean, the market's interesting now. I'm happy that it's providing profitable opportunities on the marketing side of stuff. So I got a lot of homework. I've made a lot of promises on these corn and bean sheets here. I actually got to get them done. The numbers have been changing so fast, which is a good thing because it's been going higher. Today's the day, and tonight's the night I get that done and get some information out to people. But no, exciting markets. I'm happy.
I like when volatility comes in. It gives us way more opportunities. We talked about volatility a few weeks ago, and the bean volatility really went up this past week. So.
Yeah, even if you've been a bear in these markets for the last couple months, it's not been easy. It's just you get markets where sometimes the best position is no position, and that was definitely this market where you saw this fund position growing, and obviously if you're short, you were making money. But you saw it growing, but it did look like it was going to be trouble. Like, what are the odds nothing pops up in between, March and June? One can argue whether these are big deals or not on the delayed plantings, and we won't get into that, because that's going to be a personal thing on farms. As a group, though, what are we 1% behind in the corn plantings, and beans are ahead, the 5-year average. Minneapolis wheat's way ahead. I was making the argument last week. It's really hard to have delays when you're running ahead of the seasonal average, but it's still early. Things can change. I just think back to 2019, and I don't dismiss the delays because there's going to be some farms that don't get it in any given year. But 2019 was bad. This is not 2019.
No, and it's definitely localized that's behind, and there's localized that are ahead. And you can make the argument that maybe it's some really strong areas of the country that are behind, but let's see what happens 2 weeks from now.
Yeah, weather is weather, and weather changes. And I love you get the rain and it's hitting the window, and they're all inside. You talk to these producers. Oh, we're not going to turn a wheel here for 2 weeks, maybe 3, maybe 4. You hear that 3 days later, you see you guys driving around. There's dust kicking up the back. When the sun shines, things change. The wind blows. It's just that time of year where things change very quickly. Sometimes for the better, sometimes for the worse. But locally here in the Western Corn Belt, looks like the weather's really looking good now suddenly. It looked horrible a few days ago. Now it's looking good. Eastern Corn Belt still is going to struggle, though, for sure.
Yeah. And the reality is there is, like you had just said it, there's always places that are going to struggle. And there's always places that are going to have a great year. Yeah,
so if you go on Facebook and you look hard enough, you're going to see, I see a wet field with 2 big fans by it saying, maybe we'll plant by July. You're going to see any meme you want to see that it's too wet or too dry, or, the latest is the roots are all going to be shallow now. So, too much moisture is bad, and last year it wasn't enough moisture. So it gets to be an emotional time of year, and it gets to be real personal. So the talent is kind of separating that and trying to see as a whole what's going on. And right now I'd call it neutral, slightly supportive. I don't know how you feel.
Yeah, no, neutral is how I feel. I'm glad to see prices moving, but I'm neutral on where it's at. The next 2 weeks are going to be big, though. I mean, we'll know a whole lot more.
Yeah, that's what's nice. In the next 6 weeks as a whole, there's a lot of action and a lot of weather packed into that. And then generally it's over. It's in everybody's mind, it lasts all summer, but more often than not, it doesn't. 2012 being the exception. That did last until August, and there was quite some fireworks there. But generally, a lot of stuff's done by the end of June as far as, the big threats. You never say never, it's the markets, but, as a rule of thumb, it all happens in the next six weeks.
Yeah. No, I mean, I'm looking for opportunities, and we'll see what happens in the next 2 weeks. That's how I'm going to talk about marketing, and from a speculation side anyway.
Yeah, what isn't there 1 minute, all of a sudden you get something like that, and there's 5 different things that wasn't there even a few days ago. That's why I like the markets. Just when you think there's nothing, all of a sudden there's a lot to do.
Yeah, absolutely. Although it's been a good spring to sit on your hands, so I'm glad to see some stuff coming in.
That has paid off so far.
Yeah. If you want to reach out to us, send us hate mail or love mail or just mention a topic you'd like to hear us discuss. It's hedgeheadspod@gmail.com. If you'd like to talk to John, I'll let him give you his contact.
Yeah, or any corrections. Maybe we like I was talking about the commitment of traders. Maybe you can refine some of the memories I have on what that the dates on that. Anything that you think that we might not cover correctly, be more than we want to hear feedback. Be more than willing to hear what you have to say. 218-731-1578.
Thanks, John. Have a good one.
Thanks.
You stopped, but I wrote a note. Don't hit the table. You were emphasizing your point. That sounds like a bass drum.
Okay,
when you're doing it.
That'll be talked about next time. I got a production note not to talk with my hands into the table.